Hey traders, checking out of the stock market today. An impressive bear day with complete control, even in the face of some extreme RSI levels, which we will look at. Some laggard bear sectors rolling over and accelerating to the downside. And we'll see if any bounces are coming in the short term. All right, so we started the day with a big gap down open in the broader market. And the most impressive thing for me for bear control was seeing that the 4-hour RSI started the day in the teens and we still didn't bounce. We still saw complete bear control throughout the morning. When the morning bounce got going, we had some sectors up at the high of the day. QQQ was leading the bounce in the first 5 minutes. The financial sector did not join. And by the time it did, it was too late for us to have any confidence. When we're playing against a trend like that, if we're going to see any bounce follow through, we have to see all major sectors at the high at the same time, which we did not. And we then rolled over to fresh lows. The bounce that took place through the morning, just an hourly lower high. We rejected from hourly EMA 12 resistance. We failed to break the high of the day. We hit first 5-minute oversold conditions, overbought conditions, and that marked the top. Just like 5-minute backburners, hourly backburners work well in a bull market, the opposing side is true. Overbought conditions can help us pinpoint lower highs on longer term time frames in a bear market. So here's an instance where 5-minute overbought marked our hourly lower high. It's the exact opposite of a backburner bounce in an uptrend. So we ended down with a fresh low of the day into the close. Some sectors standing out stronger than others into the close, but overall, a big win for the bears. I am still not interested in looking to be aggressive on bounces. The 4-hour RSI has me close to being interested, but the fact that the daily is not yet oversold is a big pause for me. Now, if the daily RSI were 25 today and the 4-hour RSI was where it was, it would have been different. But because the daily is not oversold on the NASDAQ nor the S&P 500, I cannot step in front of the speeding bear train and try and play bounces. It's not beat up enough. So we are watching the hourly downtrend as our short-term guide. If we're looking at QQQ, into tomorrow, depending on where we open, if we gap down, we're going to say anything under 281.22 is an hourly lower high. I would be surprised if we gap down because, again, the RSI levels are such that if we were to gap down, the 4-hour RSI would pretty much be in single digits. Where we stand right now, the 4-hour RSI is lower than it got during the COVID dump. And that was surprising because of how significant and how fast we dropped and how hard we dropped during that dump. But it's more beat up today, and it didn't lead to a bounce. So we're in a market environment, we were talking a bit about it this morning, where it feels very exhausting. You can feel it's a palpable tension. And that was present during the CVID dump. The biggest difference is the speed. The CVID dump was a Band-Aid. We ripped the Band-Aid off. We absolutely dumped. It was fast and hard. There were brutal days. And I can remember reflecting back during this period now and saying, how in the world did we make it through that? How are we seeing limit down days? And really, it was just the speed. It was over as quickly as it started as far as the V-shaped recovery. And this is a lot more prolonged and a lot more follow through for bears in terms of not percentage drop, but the trends, the lower highs and lower lows. Takes longer for that to develop, and they have developed, and the bears now have control on all time frames again because we have dropped to the weekly lower low. In the recent past, the drops to the lower lows have lacked follow through, at least initially. So we're keeping an eye on that, but again, even when we bounce, we're just going to be looking for daily lower highs to be the result of those bounces because there's a lot of space for it to form. We've got the FOMC on Wednesday. We're watching, is it going to be a 50 hike or a 75 basis point hike? And at this point, the last 3 days, we have significantly shifted probabilities because when CPI numbers came out, the market said, uh-oh, Fed might go 75 now. And if we go 50, I'll be looking for the potential that leads to a short-term bounce, maybe just to set a daily lower high. But we have seen a couple instances where we dump into the FOMC and then the actual FOMC reaction has a bit of a bull bounce. And that is the main event for the week, Wednesday, 2 p.m. Eastern. Burden is on bulls. We know that much. Bears have absolute complete control. Again, we're just not oversold enough for me to step in front of the speeding bear train. The times that I have done it have been in very beat up daily oversold conditions as well. And my most notable one was 2018 when I put out a video that many of you watched right down near the bottom. And I guess the daily RSI wasn't that beat up, but it was just getting oversold. No, it was, am I thinking of 2016? Don't tell me it's been that long. No, 2018. Could have sworn it was Christmas. Anyways, there it is. I was at the start of the year. It was the end of the year. Daily oversold. Daily oversold RSI in the low 20s to align with all those shorter term RSI levels being oversold. I will step in front of a speeding bear train for a daily bounce if that's the setup. But if we were going to get there from here, we would need another 2 or 3 big red days in a row to get that extreme. Otherwise, I'm not going to nail the bottom. And I already know that. I'm going to wait for bulls to prove something to me to then have levels to go off of. So I did attempt to add some long positions during this sideways range. And as soon as we broke support, stop out of those long positions. Give us a nice clear level nearby. But if we are in free fall and we are not in extremes, I'm not interested in a bounce. I'll be looking for lower highs for bearish entries. So I already know at this point, we'll be looking for daily lower highs. The next time we bounce, the S&P 500, everything that I said is pretty much the same. Wasn't as bearish as the NASDAQ today. Not by much, but the financial sector had a bit of a stronger bounce. Same thing though, overall. 4-hour is crushed. We're going to scout a 4-hour lower high to be the result of the next bounce. The daily is not oversold yet. Yes, it's close, but we're not oversold yet. The weekly downtrend continues. We have the lower high on the weekly now as our midterm benchmark level. As long as that's resistant, we are certainly in a midterm downtrend. So bears in full control. SMH dropping to the lower low, close at the low of the day, 3 days in a row. Some names have gapped down 3 days in a row. And generally, as a bullish reversal pattern, you look for a green day, the 4th day in that pattern. But certainly going to be cautious personally. Hourly downtrends. Keep it simple. If we are setting hourly lower highs every bounce, the bears have absolutely nothing to worry about. If we break hourly lower highs, that's the first step towards trying to shape up daily bounces. NVDA key support being tested right now, 155 to 157, this double bottom. We have not dropped to a fresh lower low yet here. Some names are not hitting the low of the year, other names are. So those are obviously very distinct differences between the two. But we're testing the support level of 155 and 157, increasing bear volume, close at the low. And again, you can just feel the fear picking up a bit. And a lot of it has to do with the 10-year, just in terms of starting to go parabolic. Biggest 2-day move in the 10-year in a very long time. And just big time breakout from that last weekly consolidation. Highest level in a bunch of years, decade. So that was a reason, in my opinion, the strength of the 10-year, the strength of the dollar, definitely some reasons that we weren't seeing much, if any, bounce. The dollar closing at the high of the day, hitting higher highs. It's not breaking out as significantly as the 10-year, but certainly very similar. Hourly EMA 12. Tesla is not down at fresh lows yet. 620 is still support, but certainly bears in control. Hourly downtrend, daily, weekly downtrend, and only support is 620.57. Healthcare sector, I've been talking about this very key level for me in the 123s. We have confirmed a head and shoulders and broken that level to bring us to the lowest levels that we've seen in a year. That is a sector that stood out as Team Bull joining Team Bear. We're seeing bear rotation. How long do we talk about bull rotation? If we're not seeing all major sectors drop at the same time, rotation's going on. Bull money is going somewhere. And that kept the market healthy for so long. We were seeing the opposite. We saw initially, going back a couple of months, XLV was at the high. Commodities were at the highs. And places that were strong rolled over and joined Team Bear. There's a specific 3-day period there where money clearly started leaving the market as opposed to rotating around. We're seeing it again with a new wave of previously stronger names, XLU, utilities. We were just very close to all-time highs a couple weeks ago. Here we are now confirming the first clear weekly downtrend in at least a year. It's joining Team Bear. Energy, big time drop today. Energy was down over 5%. We're not seeing weakness in oil and natural gas yet, which we'll look at. We're seeing weakness in the energy sector irregardless of that. Bears are positioned well if we do see any weakness in oil or natural gas. But again, it's a lead bull, and you're seeing, the mindset is where is capital going to go? Where's the safe haven here? The metals I'm seeing a ton of frustrated metals traders saying, I nailed inflation. I nailed that call, and my instruments to play that nailed call are losing me money. So where does the money go? Obviously, shorting is making money, but aside from that, where does long money go? Right now, there's nowhere that long money is clearly going. The energy sector, we're going to watch for a weekly high or low. We're still in a longer-term uptrend, but it has pulled back the last 4 days very significantly, double-digit percentage. We've created space now where the next time we bounce, we're just going to look for a daily lower high to be the result of that bounce in the energy sector. So I guess energy commodities still have some uptrends and are holding some strength. That's one place where money is going. But once those top out, where is the money going to rotate? I don't have the answer. I'm watching for it. But we're definitely seeing a lot of weakness in a lot of places. One of the things I said about the financial, or I should say the healthcare sector, was if we're going to see big time fear and bear follow through and all these doomsday scenarios, XLV must break the 123s, which it has now done. That's not the only factor here. It's just one. That's a point that the bulls had in their column that is now in the bear column, and that's what we're just seeing one by one. It's just all the bull points are heading over to the bear list as bears continue to prove their follow through. So the financial sector had a better bounce than many other places today, but we still rolled over and broke the low of the day into the close. The daily has broken to lower lows. Again, the RSI on the daily is not that beat up on many names because we're coming from a weekly bounce. And yes, the acceleration to the downside is extremely fast here. Got fresh bug bites. The acceleration is fast to the downside, but because it's coming from a 2 to 3 week bounce, the RSIs are not that beat up. Tons of space for daily lower highs to be the result of bounces from here. Hourly downtrend is our short-term guide, knowing the bulls must gain the hourly trend for any kind of convincing daily bounce to be underway. IWM, not at fresh lows yet, 168.46. Testing those lows, but still holding on a little bit stronger, just barely. We certainly wouldn't call IWM strong. We would just say it's not as weak at the moment. Biotech sector also testing the low, same story. 61.78, the low of the year. It is not strong. It's a weekly bear flag close to confirming, but it's not as weak as many other sectors the last 3 days. So a couple support levels in play here. So XBI, IWM, NVDA has support. Handful of the growth names have support, but other than that, many names hitting fresh lows. The dollar, as I mentioned, very strong. Space for higher lows on all time frames. Next time we consolidate, we'll be looking for a daily higher low. If we lose a 4-hour uptrend, as I mentioned, the metals, when you're seeing a shift in correlation, absolutely pay attention to it. But 1 day means nothing. 1 day often is a fluke. The metals, 1 day shift in correlation on Friday was a fluke. We gave it all back and then some. So that had me say, oh, I'm paying attention to metals. And then I stopped paying attention to metals as soon as I saw today's action. So we will see capital shift somewhere. It's got to find a home somewhere. It's definitely a lot of sitting in cash right now. But there's a whole bunch of inflation out there. It's got to go to work somewhere. So keeping an eye out for it, but just not seeing it in many places. So gold and silver, weak, fresh lows, looking at the low of this pullback the last couple months. The miners, same deal, daily inside bar, but just barely. We closed at the low, giving back everything from Friday. Oil. So is oil going to roll over and help these energy bears? Bulls bought the dip today. Significant V-shaped bounce on the hourly. Daily EMA 12 support has been holding for a month. Nothing changes as long as daily EMA 12 is support. Natural gas is a little bit weaker. Daily lower high has been set, watching this rising wedge, but it is still holding support. Bears must break 796. Again, XLE bears are just hoping. Come on, energy commodities, roll over. Let's accelerate this move to the downside. Let's join Team Bear. Let's see profit taking in this sector and in these names that have done very well. We're not seeing it yet, but we're watching for it. Uranium, CCJ, weekly equilibrium watch. There's a bunch of names where we are scouting a weekly higher low as the most likely scenario. CCJ is one of them. Again, just massive volatility in both directions leading to an equilibrium. Breakout, big dump, big bounce, pullback, scouting a higher low compared to 2002 for the weekly higher low here. We've got NIO is scouting a weekly higher low. Big red day today, down 12%. It is certainly not immune to any market weakness, but we've got more space to work with from the relative strength of the last month. BABA is the same deal. Range bound, nice and tight. We will be scouting a weekly higher low compared to 78.01 on BABA. So for me, seeing the acceleration of the 10-year today has me in anomaly mode, meaning things can get a lot more extreme and do things that I would not expect in this market environment with the 10-year seeing that kind of acceleration to the upside. And again, for me, that just means protective of my capital. In these current market environments, some people specialize and smash it as bears, and that's great. I try and make some money as a bear, but I know that is not where my strengths as a trader lie. Definitely want to improve. This is a great environment to be practicing and looking to improve, but my history shows preserving capital during periods of bear markets. And you might be saying, you've only been trading for 11 years. What kind of bear market have you seen? Crypto dumping 85% plus, cannabis dumping 80%. So there's definitely been bear markets. But I preserved my capital. I mean, it's the same thing. What we're seeing in the broader market is a big lesson for me because it's what I'm used to seeing in little niche individual sectors that have euphoria and blow off tops and big pullbacks. And we're seeing it in the broader market, fueled by the massive push up post CVID pumping, printing. And again, what I expect, I know this isn't going to be a whole bunch of help given any predictions, but what I expect is a higher low compared to 212 on SPY and a 2-month equilibrium that lasts a prolonged period of time. Question is, where do we find that bottom? There's a whole bunch of space where that could happen. It could be 360, it could be 300, it could be 260. I don't have a crystal ball. But I do know through my experience that periods of massive moves up that have big time pullbacks, generally we scout equilibriums. And all you got to do is look at CCJ weekly chart to just see a little mini version of that. So this is the 2-month breakout on SPY. This is the big pullback. We ended up retracing 70% or so. No idea how much retracement we'll see. At this point, we're pushing maybe 42% retracement, barely 40% retracement. If we drop down to 50% retracement, that's when our equilibrium guide tells us to anticipate a lower high as the more likely scenario. And again, next thing you know, a year goes by within a sideways range. Potentially, that may be the case. But first things first, we have to find a bottom, and that may take a long time too. One day at a time, as always. FOMC Wednesday, complete bear control. Definitely a lot of fear, but fear and 4-hour RSI is not enough for me to step in front of the speeding bear train. I need daily RSI oversold as well if I'm going to do that. All right, do good things. Appreciate you watching, and we'll see you tomorrow.
Came to check out these caterpillars. I know they can take over the trees, but we had one last year and it was just one nest. They did their thing, they ate some of it, and they left. So I'm going to let them do it again. Look at this. This wasp is trying to get in there and attack them. They've got their web protection. This is going to get interesting. First, I thought the wasp was stuck. This is one of my favorite scents in the garden. It's Sweet Anne's Lace. I planted it a couple years ago, and there was a solid plant, and then there was nothing here last year, and then one of the seeds germinated this year to get it going again. They get nice and big. You can plant them all around your house. Just makes everything smell great.